It's Monday, the 7th of September, 2015. Welcome. I'm going to try and keep it short this morning. I'm a little bit under the weather. Managed to catch summertime flu somehow. So just going to work through a handful of charts. Before that, maybe a quick cursory glance at the economic calendar and maybe economic developments which will be happening over the coming weeks. On the calendar this week, dominated by the central banks more than anything else. On Wednesday, we have the Bank of Canada with their latest rating statement, and that will be followed by the Reserve Bank of New Zealand with their cash rating statement. On Thursday, focus is likely to fall on Australian employment numbers. That will be an important one. And also on Thursday is the Bank of England with their rating statement, and as well the voting pattern from the last Monetary Policy Committee meeting. And I know I've talked about this several times before, but it does remain very much of interest. Every time Mark Carney speaks, he's hawkish, and he's sending out all the kind of hawkish signals to say, hey, the rates are going to rise, and it's going to be sooner than you think, and it's going to be before the end of this year. But we need to start seeing the voting pattern reflecting those comments, and that's not something which has happened to date. So any change in the voting pattern, that's likely to cause some, I think, extreme levels of volatility on pound crosses, as if the kind of volatility that we've seen over the last few weeks has not been enough to satisfy you guys. So I'll be very much interested in following that. There is still the whole debate about whether the Bank of England will raise first or whether the Fed will raise first. We've got the Fed minutes next week, so that's going to be on the 17th. I think, is that going to be a Thursday? Yeah, right. So that's going to be on the 17th. It's the big one with the press conference, so there had been a lot of expectation that September is going to be the one where they actually end up raising rates, and we're going to have to kind of see what they've thought about the situation in China and how that's developed over the last few weeks. And there's been some commentary that maybe that might become cause for them to delay rate rise even further. And if they're not doing it now, September, October, you're not really going to be looking until the beginning of next year, right? So I think this whole kind of thing in China has thrown the field open a little bit, and it's widened the scope of actions that the Bank of England or the Fed might take, and I think that makes for some interesting dynamic, particularly on the pound dollar. As far as the bull bear bias is concerned on the instrument, I think there are a few things to note on this particular instrument. And so a bit of a generic analysis this morning on the pound dollar. First off is that actually, we are down on the month, and so long as the price remains below the 53.30 area, we will actually remain down on the month, right? So she's showing quite a sharp rally up through the 52 handle right now. That's okay. We've got a bullish week, but the month actually is bearish. The price, so long as the price remains below 53.30. So I'm interested in the flow dynamics on the pound dollar. Whilst I like the idea of being long on the instrument, my only consideration is that if I'm going to be long on the instrument, we need to see the price up above that level. Once she's up above that level and we're seeing some kind of support structure being established, then I think it would become quite reasonable to start looking for continuation to the upside on the instrument. But so long as the price remains below 53.30, 53.40, which is the monthly open price for the month of September, and we're still only a few days in to September, so there's a lot of time for price action to develop during the course of this month. But generally speaking, at this early stage, I don't want to find myself on the wrong side of the flow. And so if I'm buying, I would be looking once a support has been established above the 53.30 price area, right? So above that monthly open. Before that, and so long as the price is remaining below that, even if she's rallying up towards it, then I'm quite happy maintaining a short bias, although maintaining that short bias isn't necessarily going to translate into any kind of practical action or any trade which I'm planning on taking. So I'd like to be long on the pound dollar, but I have my trigger conditions, and those very much depend on the direction of the flow overall, right? So that's the pound dollar. So a lot of interest in pound crosses generally this week. I also have some interest in the pound Canadian, so if we can look at that actually, because I think this may be something which is triggering. Pound Canadian, a couple of walls which you need to have marked in your charts. The first one here, that's the support from the 28th of June connected to the support on the 9th of July. And I actually think that there's a channel which is forming here on the pound Canadian. And we've had an overthrow of that channel. And ordinarily what would happen is that when you have a channel wall which is breached like that, your general kind of expectation would be that when the price goes, you're looking for a sharp retest and then a continuation to the downside. In this instance, I'm more interested in the overthrow and the throwback. And so actually what I would like to see happen is for a strong breakthrough bar back above that channel wall. And once that's happened, then I think it becomes reasonable to look for a little pullback. You get your throwback kiss on the wall, and then a move higher on the pound Canadian, right? So both of these plays are equally valid. If you're looking for the short on the underside of that wall, it's a support resistance wall. You'd expect a reaction off the underside of it. But what I'm interested in is the scenario where we end up getting actually a throwback. So if you understand the way that price moves around these types of walls, there's only so many circumstances that can happen, but either you're going to get a very precise reaction and a follow through to the downside, or what's going to happen is she's going to go hit that tap off of it, break up through it, and then end up making her way higher, right? So those are the scenarios. They're both equally valid as far as plays are concerned, but the scenario that I'm interested in is if we in fact see something like that happen, then a little kiss back, and a H1, H4 break above that wall would be enough of a confirmation for me. So she doesn't need to break hundreds and hundreds of pips above it and then pull back. I'm looking for H1, H4 confirmation, bullish bar breaking through the wall, pullback, and I'd be looking to buy the kiss off of that wall. I think it'll give you quite a tight situation with the stop, and you might not need, considering the kind of volatility there on pound Canadian, you're going to need probably about 40 pips, but not really much more than that. All right, so I like the idea of tapping completion here on the pound Canadian. I like that move very much. And if there's one trade which I'm going to be taking this week, it'll probably be this one. This will be the one that looks like it's most likely to trigger. And so given the potential for that overthrow, I'm prepared to play it. Like I said, it's a resistance wall. If you want to look for the short, it's equally valid, but just my own personal preference here is to look for a little bit of upside on the instrument. I'm also marking something like this. I don't know if this will copy. Let's just see if it copies to where I want it. Not exactly where I want it, but I'll also be marking something like that. All right, so that's the support from the 4th of August. Going to the support from the on the 25th of August, it is marking a wall between those supports. And then my expectation actually would be that if it happens that the price can break up above that, so if after the price can break up above that, there's a little pullback and to the upside, it might open the door all the way up to the underside of that resistance wall, right? So it could turn into quite a significant play, right? Although I have been quite cowardly in the market recently, right? So I've been more than satisfied with grabbing the best part of 10 pips sometimes and getting out, but here I think there is a significant swing potential and room for continuation of the previously established bullish momentum. Pound Swissy, again, a little bit of an interesting scenario here if we're looking at the kind of wider perspective. So you'll remember that from January 15th, right? So if you're a relatively new trader and you don't know anything about January the 15th, Wikipedia is a good place to get started. After that, do search something like brokers collapsing, brokers going bankrupt. So yeah, but that's January the 15th right there. So she came actually quite close to filling that. How shy? She was about 100 pips shy, maybe just under 100 pips shy of actually filling that. And there is potential that is something that could still happen. So what I thought would be interesting here, a couple of ideas. So just first off, is to just mark that resistance block, right? That's a fairly obvious resistance block if there ever was one. And although she's not rounding, you might have an expectation that a breach of that resistance, a little tap back for support, and you could be looking actually at a continuation of this previously established momentum. But what is critical is that the price would have to break above that 449 price handle in order to confirm that, and the play would only remain valid so long as the price remained above 149, right? So you can't kind of rule out the possibility. You do sometimes get something like that happening where you kind of get this massive fake out, right? And knowing that you can have this type of price behavior, what it does allow you to do is when you have a scenario like this is to consider the stop and reverse based upon pattern failure, right? So if you consider this to be the pattern in this particular instance, a breach of the resistance becoming support and a move higher, equally when you see that pattern fail, that would signal that there's going to be quite a strong continuation to the downside. So although it requires a stop and reverse, and I think you really need to kind of pick sides here, just like we've had to do with the pound Canadian, right? So I'll kind of pick the side and say, well, I'd like to play it breaking higher. Pound Swissy offering pretty much the same kind of scenario. You just have to pick a side, and there's room even here if you want to pick both sides, right? So it's going to be about getting good risk definition on it. But if she's breaking through that resistance, you can expect her to move significantly higher. And if you get that false break and the price breaking down, then you can expect another significant swing lower on the instrument, and maybe even that pushes back to release the trap all the way down sub 40 price handle, right? So 139.70 price area. All right, so pound Swissy, there's plenty of room, then good structure as well to be decided. If I had to choose, I would probably choose the pattern failure here. All right, so if you said, hey, what's your preference? Well, it would be the pattern failure. And the reason is that you can watch this and the pattern failure never happens, and you're like, hey, I just missed a 500 rally, right? But if the pattern failure does happen, where the price breaks up above that, once she breaks back below it, that is like 100% probability trade. That is definitely a false break to the upside, and she is going to follow through to the downside. You'll definitely make pips on that. Whereas If you're trying to play the break to the upside, there's the potential where it can carry through, or equally there's a potential where you're going to get some kind of failure. All right, so if I had my choice, it would be the pattern failure, and I would be more inclined towards trading the failure than trading the pattern itself in this particular instance. Right, so I've done the pound Canadian, and the pound Swissy. Right, two more this morning. So pound Canadian, and I think we may have looked at this last time when I was here a couple of weeks ago. That there is reason for believing that maybe this wave here, and I'm going to probably be using this word a little bit more than I should over the next few weeks. This wave here is terminal, and that this is the last wave up before a very significant correction. My reason for believing that is that there's a lot of symmetry now here on this instrument. There is we have support which is becoming a resistance up here on the underside of this wall, and if we're lucky, there might even be some kind of sine wave structure. And that's a term you probably haven't heard from in a while, because the structure hasn't appeared in a while, right? But there may even be some kind of sine wave completion here. And with that being the case, I'm very much interested in looking for a short on the dollar Canadian, and this is going to be a waiting game with the dollar Canadian, right? So as far as the weighting is concerned, the ideal entry is going to be on the underside of our wall. That is the kind of reasonable expectation that we might have, that support would turn resistance somewhere there. And so if it happens that the price makes the way higher, and she goes and hits the wall, then without any ambiguity, I will be looking for the short trade. I'm quite happy to go aggressive at the wall often and then fade against it, but sometimes the safer route is when the price goes and hits that. You wait for a 1 minute bearish bar first, right? Okay, or a 5 minute bearish bar, or a 15 minute bearish bar, whatever it takes to give you a little bit of satisfaction that in fact there is a level here, and usually just one bearish bar can be enough, right? But you get a H1 bearish bar, H4 bearish bar, that's as good as confirmation that you're going to get. And so if the price is hitting the underside of that wall, I'm going to be short off of it, and I'm not really worried whether that happens during the course of the week now, or whether that happens during a news announcement. So we have got the Bank of Canada this week, and then we have got FOMC next week. So the dollar and the Canadian in play. The Canadian more so this week, and then the dollar more so next week. But I like the idea of shorting the underside of that wall. And then after having considered that, and so I've been kind of staring at this for a couple of weeks now, and outlined it to our subscribers last week, this particular play. But after having considered it further, one of the considerations which we've had is that what if actually this is some kind of weirdo double top which is forming here, right? So you sometimes you can get these double tops. They look something like this, where the second top is a little bit higher, makes a higher high than the first top. So what if something like that is going on? And then toward that end, what I'm kind of recommending is that what you can do is mark a lower support wall, something like that. And again, it's kind of to your satisfaction. So something like that, if you want to take in all of those. And then if it's happening that the price is going to fail here, if she's going to fail here, then what would happen is that a breach of that support wall would become your trigger for the short. And you could chase that, or you could wait for the retest on the underside and then look for further continuation to the downside. And now, if the dollar Canadian does start breaking down, and I mentioned last week that sometimes trading, they say, is like being an actor, right? So the traders like being an actor, and actors say, hey, we don't get paid for acting, we get paid for waiting around, right? So it's like 2 minutes doing a scene on the set, and then back to the trailer or caravan or whatever for a massage. So this is a little bit like that. It's this symmetry could take its time to play out, but once it completes, if it hasn't done that already, once it completes, there will be a significant opportunity for pips, right? So if she's going to break down, if that symmetry is going to complete, regardless of whether we get our breach of the support wall, which would be my preferred option right now, or if she goes and rallies another few hundred pips, and that could very well happen, and then we're kind of shorting the underside of our resistance wall there. To the downside, we have a fairly significant target, which is extending all the way into the 22 price handle, maybe even lower than that, right? So we have quite a deep and significant target on the dollar Canadian. She could correct a lot, and so that's going to kind of make it worthwhile. Now, while we're waiting for that short, it might mean that you end up missing 1,000 rally north on the instrument, and I've found myself on the wrong side of my own analysis every now and then, right? But I'm a pattern trader, and when the pattern does complete, that's when I profit, right? So that's what I'm looking for. I'm just looking for a pattern completion. I tend not to worry about the rallies I didn't catch. It's the ones which, it's the trades that I do take which concern me, right? So, if I wanted to be a depressive, I'd look at charts every week and say, hey, I missed 200 pips there, 500 pips there, 300 pips there. That's a big waste of time. It's just a distraction. You make a plan, and then if the price behaves according to your expectation, you trade that, and you're going to be right. And that's what matters most. That is the kind of crunch and the bottom line when it just comes down to it. So that's the dollar Canadian. I'm looking for the short play. I'm short if she rallies. I'm short if she reaches the support wall. Just as a quick note, and I just want to quickly mention this, when you have a support wall like this, it's not unusual sometimes for the first break to be a false break. So she breaks, she comes back up, and then she comes down and breaks again. And that second break is the one that gives the follow through, right? So if I find that I have to make more than one attempt on the instrument, I will make more than one attempt. I'm not really overly concerned about that. I think that the pip target or the price target to the downside is significant enough to allow for more than one attempt here. All right, last one up this morning from my list is the Aussie dollar, and I just wanted to highlight the symmetry in Aussie dollar, just like we looked at symmetry on the dollar Canadian, similar kind of structure which is establishing itself here. And so we're taking our resistance wall from back in November 2014, and then we have that high there from March 15, and then we have some support structure here from the 22nd, 23rd of April. It's possible to actually mark this wall in a couple of ways. You can also do something like that. All right, so it's not unusual for the wall to be marked like that and to be able to be getting a reaction there. But what's interesting with the Aussie dollar, and why I'm kind of looking at that structure, is that again, there is potential when you have this kind of structure for us to be considering that wave to be terminal once she's gone and hit that wall. Now, with the Aussie dollar, I'm a little bit more conservative. If she goes and hits the wall, I need a confirmation of a bullish daily bar. I need a bullish daily close, and then at that point I will start paying more attention to what's happening at that wall, and particularly if you get a kind of pullback after that and then another strike on the wall, that tends to be the one which would hold, and you'd kind of get a swing off of that. But it is worth noting this on the Aussie dollar, that symmetry is there. And it's been a long time since we've seen symmetry like this, and it's been a long time since we've seen. So I'm talking like maybe 2 or 3 years since we've had symmetry like this. All right, so it's a nice symmetry, and it usually tends to suggest that that the wave is terminal. And when we're talking about the wave, we're not talking about the trend. We just mean this down wave would end up terminating here, and then you're going to get a significant up wave after that. That's what I mean by terminal, right? But it's a nice symmetry, and it is worth considering and keeping an eye on that. As far as the fundamental picture is concerned on the Aussie dollar, that's something, if you want to understand it, you've got to go to a weekly chart. And if we're looking at the weekly chart here, there is a support cluster here. So we're going all the way back to the GFC, right? So there was this huge kind of drop in the Aussie dollar, maybe 4,000 odd pips from high to lows. And what was important here, and what I consider important here, was the Reserve Bank of Australia, right? So remember up here how the RBA was making all these noises about how they thought that the Aussie dollar was overvalued, and over here they were making noises about how they didn't like the idea of secular moves in the Aussie dollar and all of that kind of stuff. Well, back in 2008, when the price was here in the 60s, the Reserve Bank was making a heck of a lot of noise about how they thought the Aussie dollar was undervalued, and not just undervalued, it was a kind of terminology that they used, right? It was to the effect of something like, it's hugely and grossly undervalued at current levels. And once those kinds of statements had been uttered, it was just a matter of course that the Aussie dollar would start rallying, and there was some intervention there from the RBA as well in order to kick off that process. So I do have good reason for believing that as the price ends up pushing back through that block, she's likely at some point to find support. And if it doesn't matter that it was 7 years ago, if they thought that it was undervalued at these kinds of prices 7 years ago, there's nothing to say that they don't consider it undervalued now, right? We know they consider it overvalued at 110, but that news too now is almost 3 years old, right? So they considered it overvalued in the 60s, I think, and that if she does head lower, and I just want to kind of add something else here, which is that there's nothing to say that she can't go and hit the base, and there's nothing to say that she can't even make her way through the base, but certainly this is the area, this is the place where you start expecting the buying pressure to resume, right? Or the bullish flows to come back into fashion. If it was going to happen, then this is the zone where it would be quite reasonable expectation for that to be happening from. And so the lower she goes into that block, particularly if we start seeing stalls, and just note, I'm on the weekly chart here, right? So that consolidation, it lasted the best part of a few months, right? But if she heads into that zone and she starts consolidating, we would have to take that as an indication that that the buyers are getting involved again at these kinds of levels. So I think it's going to be worth very much monitoring the Aussie 2 over the coming weeks and months. Maybe it's a longer term perspective than what you're usually used to when I'm presenting analysis here, but it is something which is on my mind right now, and so I just wanted to kind of open that up with you guys. That's my lot, folks. That's all I wanted to cover. There's some interest there in oil. I don't trade oil, so I don't really have a view. If I was going to trade oil, I would mark the daily open and the weekly open and the monthly open and just go with the flow. Whatever direction the price breaks in, I think that's the direction to be trading on oil. And then after that, it just depends on whether you are short-term or long-term. From a fundamental perspective, I think that it is a commodity at the end of the day, and its price is not going to go to zero, right? And any time that it's in the 30s, it does look as though it's getting bought up, right? So I can kind of give you a general outlook on it, but it's not something that I trade myself I've never traded it, right? So never done it. Certainly not with any enthusiasm anyway. It's for mugs. I don't really do that. But it's one of those things I find it tends to be more driven fundamentally than technically, and whereas currencies I find tend to be driven more technically, or the technicals tend to matter at least, right? So with the commodities, you get technicals blown out quite a lot, and so I tend to avoid that. All right, quick glance at the Euro USD. So this is le Euro, and I think what I would be doing with the Euro, it would be similar perspective to what we've established on the pound dollar. So what we'd be saying is that this is all about it's all about the base, right? No trouble. It's all about the flows, and our monthly flows on the instrument right now are negative, and so long as that is the case, then I don't think that you'd want to be a buyer on the instrument. Last week's resistance was established here at the 113 price handle, right? So that's your kind of resistance block there. Right, so that's your resistance block there, and then as far as the flows are concerned, I guess we just got to look at with monthly. So the monthly is just kind of below that, right? So it's the 113 price handle, and I think that so long as she's below the 113, actually it's a short. If you're looking for a short trigger on the instrument, then I guess all you have to do is to mark the support, right? So there's your support wall, something like that. And this is not a trade recommendation, but it was like, if someone held a gun to my head and said, hey, how would you short the euro if you had to short it? I'd say, well, I'd wait for a breach of that support and then I'd look for a follow-through. Caveat again, not a trade recommendation. All right, but that's how you do it. Just mark the support. Look, it's a downtrend. Supports in downtrends get violated, they get breached. And so when you see the support breached, that would be a trigger to say, well, there ought to be a continuation. That is also pretty much in line where we've got so the price is pretty much in line where we've got our weekly open right now, right? She hasn't really moved a lot. So if we're going to do anything, we'd be selling it, but you would look for a breach of the support, and that would be a trigger in order to be selling or going short on the instrument. There certainly isn't a reason to be a buyer right now. Okay, so above 13, maybe you might consider it. If you can start building a trend line going higher, you might consider it. But right now, I don't know. This is why it wasn't in my presentation this morning. Do I think the price will go to 108.50? I would be surprised if we didn't get a retest of the lows, in fairness, right? So I'd be thinking lower than 108. I'd be thinking 104, right? And why not even parity, right? There's, fundamentally, there's no reason why she can't. And what with the expectation that the Fed is going to raise rates before the ECB for sure, then why not? There can be a room for another dollar rally here, and I think that would be a reasonable expectation. It wouldn't be an unreasonable expectation. What you have to remember with this pair is that she fell 3,500 pips pretty much in a straight line. All right, so the most she rallied in that 3,500 pips was 300 pips. All right, so you had 300 pip pullbacks. That was the biggest pullback you had in that entire 3,500 pip drop. All right, 300 pips. So after dropping 3,500 pips, is it really unreasonable to expect that you might have a little bit more of a significant corrective wave. And so, she's kind of pulled back, 1,200 pips, 1,300 pips, something like that. Not entirely inconsistent with the way that you would ordinarily expect price to behave after such a sustained, what we saw here was a real shift in the value of the euro. That's what you're looking at when you see a 3,500 pip drop in the instrument. So, I'm kind of happy to consider all rallies on the instrument, and I kind of remember saying that several months back, right? That any rallies, there isn't the corrective, right? But where that rally expires, I think that's going to require a bit more thought. And when we start seeing her break down, which is the one which is going to represent continuation, right? So what could very well happen here, there's a couple of scenarios, but what could very well happen here is that she flags something like that, and then you get a false break of the flag to the upside, and then she's going to break back under, and then you're going to get a continuation to the downside, something like that, right? These aren't unusual price behaviors. They're not unusual patterns of behavior, and so that's something I'll be looking for. But in the near term, I've got nothing on her, and so my own preference, I'll sit aside. I'm not committing my money to this, right? Okay, NZD USD, yeah. So NZD, so I've got it on the weekly already, right? But the Reserve Bank, they didn't make so much noise, So if we're going back to that time in 2008, they didn't make as much noise as the Reserve Bank of Australia, but nevertheless, we're headed back into that same place, right? So the origin of that breakout it's in the lower 50s actually, really, if you consider. So the origin of the breakout is here around about 52 price handle, and the origin of the breakout from that cluster is here in the 57s. So right now she's falling, and she's still falling. So we don't have any reason to be buying. And I quite often say, there's if you're going to be doing anything, you'd be selling. If you want to be buying, there's no harm in missing the first 500 pips of the rally and just catching the last 100. There's no kind of problem with that. But the general kind of outlook is that so long as she's falling, so long as you're getting these bearish weeks, the sensible thing to do, if you had to do anything, would be to be looking for an opportunity to be short. But certainly, as she heads into this block, you'd start looking for signs that buyers are becoming more active, with a general kind of expectation that what if we can get a swing reversal from here, and when we're talking swing reversal, we're going to be looking for a significant swing reversal, right? So it could be even 1,000 pips or something like that, and maybe even something signal that it's the end of the day wave, right? So similar thoughts as the Aussie dollar, but because I have that symmetry on the Aussie dollar, and I haven't in fact investigated the Kiwi here for any kind of similar symmetry. It might just be worth as a random exercise having a look what it might be. I'll have a play around with it later, right? But I haven't really investigated symmetry here. We've got that on the Aussie dollar, and that is why that is of more interest to me than the Kiwi itself. Okay, folks, that's it. I think we're out of questions too. Thank you very much for attending this morning and taking the time out to do that. Don't forget to check out my website. It's the ever so fantastically titled wmdforex.com, and I think I'll just type the link for you guys there. If you want updates from me, you can register on the website, and Yeah, that's it. I'll see you next time in about 2 weeks' time. Safe trading, guys. Till later. Bye.